Thanks everybody for attending this Shanghai chapter Fung event. Daniel Gatlinberti and I am we're co-chairs, um, and we have the pleasure of introducing Francis Bassolino of Alaris Consulting. Francis is Francis has 25 years of experience in China. He first came to China in the Hopkins program in the 1980s, actually, during 89, 88. He was here when and visited Tiananmen Square in some famous times. Later, he worked he's done it pretty much all. He started doing global supply chain for a freight forwarder, and then started consulting for Deloitte and Touche. He went on to the Chicago School of Business. We try not to hold that against him because we're Thunderbirds over here. But he went there, and then he continued with Deloitte, and then started with Alaris, and then took over Alaris as the managing partner probably about 15 years ago. He's done a lot of projects, mostly with supply chain, but he's done pricing projects, global entry into in China entry projects. He's done all sorts of factory relocations and things like that. And he's done projects throughout Southeast Asia and India, as well as in China. So he's got a lot of experience, and we're really excited to hear from him today. And with that, I'll shut up and let Francis go from there.
Okay, thank you, Jay.
Did I miss anything?
I could shorten it a little bit just to say that our firm is focused on the private equity market, primarily in the middle market. And what we're working on is supply, demand, competitive analysis, trying to operationalize people's dreams as they relate to Asia. And so much of what I'm talking about today is informed by our work for the middle market. When I say it's about $200 million, $50 million and up, basically, for companies. But mostly we're working with companies that's $200 million to $500 million in annual revenue. And so that's kind of what this presentation will focus on. And today's discussion is about globalization. And I'll jump right into it by showing you something from one of Jay's favorite organizations, the World Trade Organization. This is a story that's been out there about the death of globalization. And most of this story is based on these sort of simple statistics on this page, which show that trade as a percentage of GDP peaked in 2008, 64%. And since that time period, we've been hovering somewhere less than 60%, maybe a little bit above for 2011 to 2013. But the percentage of GDP that has gone to trade in goods has been somewhat stagnant for 15 years now. And so people have this belief that globalization has ended. But there's one sort of obvious thing about this, which is that the absolute trade volume numbers are continue to increase. And if we take a look at the way the world has developed, there are many reasons to consider this a silly proposition that globalization has peaked. So I'll talk about some of them today. So what is all this sort of talk of decoupling and deglobalization? I'd say it's primarily, one of the key things about it is the media. If you pick up the average paper today, basically every article we read is telling us that the sky is falling. And there's a analysis out there by Plus One, this organization that does media analysis. And it's basically, if you take a look at the headlines for the average newspaper, basically anger, fear, disgust, sadness. Over the time period from 2000 to 2020, all of these things have increased. The only thing that's less prevalent these days is a joyful story or a neutral story. So we're inundated with press that is being basically it rewards people for catchy headlines, and that's, globalization is dead as a catchy headline. I think that's one of my first points to make. If you take a look at both the left and the right-leaning news channels, they basically have all turned negative. And as we know, most of us have sort of gone down into these populist rabbit holes. And so what we find is that not many of us are reading centrist media anymore, which is relatively neutral. And so you get people who are at the extremes. And I think this is partially of one of the main drivers of this of the globalization story, is just that media seems to benefit from the negative reporting. And this is sort of the lightest reason. But I want to start with this to sort of warm us up a little bit. One final point on this is the age of the leadership. If we take a look at baby boomers right now, it's hard to sort of pigeonhole baby boomers into one sort of philosophical framework. But one way of doing it is to say that the average baby boomer is either into New Age, they're an environmentalist, or they're a social justice warrior. Now, there are lots of different value systems that they have behind them, sort of their politics, their focus on reinventing themselves, knowledge. But basically, the two main groups, if we use this framework, social justice warriors and environmentalists are primarily anti-capitalist and focused on dystopia. And so again, this feeds back into the narrative of the general narrative about the world is that it's falling apart. And there's plenty of reasons to know that it's not falling apart, but there's a general belief that pessimism is a way to demonstrate your intelligence, and it also is part and parcel of people's worldview these days. The facts don't bear them out. So if we take a look at this study by DHL, looking at different aspects of globalization, and in areas of information, capital, trade, and people, basically the narrative about globalization being relatively flat holds pretty much with people and trade. But when we look at capital flows and information flows, these things have not plateaued. And indeed, they've become perhaps even more important in the globalization story. Taking a look, excuse me just a second. A little technical difficulty here. Taking a look at trade depth and breadth, the numbers for this is goods trade, not services. Basically, from the World Trade Organization numbers and also from the DHL statistics, you'll see that these numbers are basically flat. And this means like the volume of trade and both the percentage of trade versus GDP. But as I said earlier, the global GDP continues to expand, and the volatility that we've seen over the last, I'll say, 10 to 12 years is partially driven by currency volatility and commodity price volatility. So in the upper right-hand corner, where trade as a percentage of GDP is volatile from 2006 to basically today, that's mostly about the price volatility of commodities. But generally speaking, the trade as a percentage of GDP is running at about 60%. Capital, as I said, continues to flow pretty readily through the global markets, and you'll see the baseline seems to be flat within the DHL survey, which is on the left, but then the capital flows, which are on the right, you're still seeing trillions of dollars of capital through bank loans, foreign portfolio investment, and foreign direct investment are flowing through the system. Information is the area where things, as you can imagine, continues to expand, and this is demonstrated both through, I say, IP exports is one area where you see basically we've quadrupled that over the last 30 years, the IP exports, and then the data that's moving globally continues to basically expand exponentially. And you'll see that these areas are the most interesting areas in terms of the expansion of globalization, which is primarily driven on the back of services. People flows is another area we've taken a look at, and the people flows I think are returning to trend after the pandemic, although we still seem to be stuck in our little behind the walls of our safe homes. But migrant populations continue to run at somewhere around 200 million international migrants, and international students is about 150 million. So you still have lots of people moving around the world, which to me indicates that globalization is not over. Now, where globalization does continue to expand is in services. It's basically been expanding by 5% per annum since 2014. And right now, this is about a $8 trillion market of the 28 trillion. Well, there's 28 trillion in trade services, and there's about 8 trillion in goods. There's 28 million in goods trade, and about 8 trillion in the trade and services. And this is things like medical services, travel, tourism. These areas are all continue to expand. And that could be a data call center in the Philippines, or an IT center, HR center in India, or accounting and tax services coming out of the United States. These areas all continue to expand, and services is one of the U.S. is the leading country in the world, responsible for about 15% of trade and services. So within commercial services, within the services trade, we have commercial services, transport services, travel, and other commercial services. All of these areas continue to expand actually quite rapidly. Just sort of at that 5, 6, 7%, almost double the global GDP. The dystopian articles you'll read about these. Even there's one in today's Economist talks about, well, this might not be, it might not have legs because if AI is gonna take it out. There's always the other side of this, that again, globalization is dead because AI is going to kill us. It's always something's going to kill us. When we look at the absolute numbers for services exports, as I said, there's about $8 trillion, and this is kind of how it breaks out in 2023. 5 trillion of it is sort of this other commercial services. 2 trillion is travel, and 1 trillion is transport, and goods related services is also about $1 trillion. So when we look at U.S. imports from a globalization perspective, I'm just going to talk primarily about the U.S. We have the obvious answer that China is the largest exporter to the United States, and this really hasn't changed very much over the last 3 years now, or 2021. You'll see that with the tariffs, China still continues to export a lot. I'll note that within the China number, there's the 80 billion from Taiwan. So if you look at it on an absolute number basis, Mexico and Canada are our biggest trading partners, and China's up there as well. If we were to take Taiwan out, they'd be in the 1-2 position. China direct exports have declined by 5%, and then the world, as far as our trading partners are concerned, not much has really changed, and I don't really think that much will change, except perhaps looking at India as a long-term driver of both services and goods exports to the United States. So when we look at the long-term growth potential, we continue to see Southeast Asia, North American trading partners, and Europe to be the most probable points of development for globalization. Of course, Africa, given its population growth, is exciting and enticing, but it's very difficult. So we think that basically what's happened, because of either the leadership infrastructure that we have within the organizations, as I was saying, either the baby boomers being risk averse, or this constant din of negative media regarding globalization, which means people are being very, very risk averse. We can see it. I'm on the ground here in Shanghai, and you can see that the decrease in the amount of foreign direct investment, and then travelers even just trying to look at what's going on in China. But what we can see is that this risk avoidance behavior is actually a form of what, I don't know, Howard Marks likes to call return avoidance, is that if you don't take on any risk, you really don't have the opportunity to take on any returns. So we are encouraging most of our clients to be open-minded about what the actual risks are. And I want to talk about specifically, so what's going on in China. Because if you have a conversation with someone about what is the future of China, one of the first things that comes to mind is that there's going to be a confrontational China. And this means that we're going to have tensions over Taiwan, these gray zone conflicts that are happening within, Chinese military sending, blockade exercises around the island. And we're expecting, like, this scenario of the future is that there's an extreme bifurcation and significant decoupling with China and the West. The Chinese have an alternative view of the future. What they have is this view of a successful China, and this would be something that Xi Jinping succeeds in most of his ambitions. That these all-encompassing party and state control leads to a shift in sustainable green growth and technological independence. And Xi Jinping is betting on a significant crisis in the West, some tangible Chinese success stories, such as maybe EV or growth of or expansion of their control over the South China Seas. Plus, they think that they're going to have a successful power play with the global South, maybe being the leader of the BRICS, extending the BRICS further. So when people look at China, they sort of have these two extremes of maybe the Chinese think they're going to be successful. The rest of the world thinks that we're dealing with a confrontational China. There's a couple of other views out there as in terms of potential scenarios. One is a very restrained China. And this would be someone where China has extreme internal weaknesses, very effective in the face of very effective coalition building in the United States. So as the United States is doing right now with around Southeast Asia, you have much more cooperation between places like the Philippines, confronting China on some island building. We have Japan and South Korea openly saying that they support Taiwan and the United States, not to mention Australia and whatnot. So this really restrains China. And if we're going down this scenario, Beijing might fail to diversify the economy, maintain growth, achieve any technical independence. They can't build external coalitions or pursue any type of effective global power play. So this is my third sort of scenario, right? We have a confrontational China, a successful China, restrained China, and then the least sort of when I tell people that maybe there's going to be détente, they think I'm crazy. So there's another view out there that maybe there's a reformist China, and that would be instigated by maybe an internal crisis, some political course correction within China. Maybe people don't believe that Xi Jinping is the future of China. So there's a warming of relations. There's a reform and opening up, maybe the second version of the reform and opening up policy. And that could lead to a return to rapid growth within China. And therefore, that would be an explosion of globalization again. So reform capital markets, property rights protections, and sort of a return of animal spirits for China. So these are the four scenarios that are out there in terms of the extremes for what might happen in China. And China is such a big part of the globalization story, and it's where I'm seated. So that's primarily why I'm speaking so much about it right now. This scenario, or these scenarios, are probably best summarized by something that combines them all, and what is referred to as a sort of a shaky China. And we think that the most probable outcome for China right now is muddling through. So little progress really in terms of their economic, social, political reforms, but really no existential crisis. There's no war in Taiwan. So we kind of continue along this current trajectory where China's trying to create a walled garden, separating themselves off in terms of the types of influences they get globally, but also trying to, in that situation, trying to trade with the world because it's so important. There's such a large installed capital base of manufacturing that they need to export. There's just so much capacity here. But there are so many challenges within the Chinese economy, whether we talk about demographically, politically, socially, things like job creation, a slowing economy, that maybe they just can't manage these things. And their politics and engagement with the world, whereas I think that if you look at it from a sort of an objective perspective, you'd have to wonder whether or not they're bipolar. 10 years ago, we had all this wolf warrior antics, and right now we have a lot of much more friendly posturing with China, and particularly with places like Australia trying to drive a wedge between the United States and their allies. But I think that most of the U.S. allies have figured out that they're not going to really side with the Chinese, because that's just not, the value systems and the future and the security just are not there. So in this muddling through scenario, we'd have sort of mixed signals. We don't know exactly which one would come out, because there's so many different variables involved with it. So we think that there'd probably be some successes in things like supercomputers, space exploration, and military power, but there are also probably be some dramatic failures. So we've seen already the insolvencies of the real estate developers. There could be some insolvencies at banks. Major companies like Alibaba, who seem to have a lead on the world, 5 years ago, now seem like they're in deep trouble. And so I think that this prominence given to stability and control, while being haunted by these intractable problems of being socialism with Chinese characteristics, I think could lead China down this path of just, again, muddling through. Over this time period, and this has a big influence on where globalization will go, these are some of the key factors that we think will make sense, and sort of what maybe some of these outcomes are. So I think in China-U.S. relations, I find it hard to see how China does well in terms of trying to make themselves out as the dominant player globally, maybe playing a dominant role in sort of global institutions and whatnot. So I think that their role in blocs and coalitions is mostly fragmented and ineffective. China should have increase in hard power projection in and around the South China Seas, but again, I think that it'll be limited to within areas close to their borders. Within the governance structure, my sense is that the state economy is something that probably will not do too well over the long term. It'll be akin to what's happened in places like Japan and Korea, where there's a lot, particularly in Korea, where there's a lot of investment, but there's sort of little return to those investments. For $1 invested in China, the return is probably half of what it is elsewhere. So the domestic economy is becoming more imbalanced. There's a bifurcation of supply and demand chains. Within the Chinese economy, the growth projections are probably somewhere in the 4 to 5% range. But the technological developments within China are limited because of the cautious behavior and the inability of international investors, one, to make money when they do make investments in China, and two, to avoid all of the restrictions that are on from technology transfers into China these days. So we think that there's I don't know how long it will take, but Xi Jinping is sort of in his 70s, and we have to wonder, what is that leadership transition going to look like? Having, as we all can appreciate, having senile leaders is not an effective structure for an economy. Okay, so this is the most likely scenario that we have for China. Is what this is from the Mercator Institute. Is what we're calling a shaky China. And I think, given time constraints, I'm not going to go through these. I'll give you a minute to maybe read and maybe pick out a few. Yeah, on the political side, I would say that it's very tenuous in terms of, people look at China as being a very strong state, but it's also a very brittle state. And so there are many people who believe that the eventual politics within China, eventually politics within China will create a very unstable situation. And this is particularly around leadership transfers. In the geopolitical sense, we've been talking about China basically having become the leader of the table of misfit toys, whereas 2008 during their coming out party for the Olympics, they were basically the head of the table with all of the world's leading economies, and at this point their closest friends are Russia, Iran, North Korea, and so they've really just backed themselves into a corner where all of their neighbors dislike them, and they're not on good terms. For example, like they're arming an existential crisis to basically the European Union by this bromance with Russia. For as far as global institutions are concerned, I don't see that these initiatives that China has, sort of the Belt and Road Initiative, the Global Development Initiative, I think that they've attracted some support from the global South, and some people have enjoyed taking their money, but I don't think it's really developed any soft power or any really clear leadership within the global institutions. And then from a military perspective, I think that their capabilities seem to be quite limited and untested. And I think that these lead us to this very, very shaky China. So these are the 5 scenarios that we've just outlined. And you'll see that the probabilities of these scenarios are kind of driven by 2 continuums. One is Xi Jinping's control and authority, whether it's relatively low or extreme. So the lower it gets, the more opportunity there is for what some refer to as the Guangzhou mindset of being much more open and reformist. And then for the socioeconomic stress is that the more extreme some of these things about either social issues or economic issues will lead us down which path. For example, if China is extremely successful in some of their global and domestic aims, then people will be satisfied with the leadership and will basically allow them to continue to have a lot of control. But if not, then China goes into peasant rebellion, which is the classic change of leadership in China. I'll leave you with this one slide, which talks about what we think is going to happen in China in terms of from an economic perspective. It looks like we're probably on this sort of 4 to 5% growth rate, which means we have about a $20 trillion economy by 2030. And that's another sort of 10 trillion in growth, in absolute growth in size of the domestic economy. And in terms of interregional trade, China will be 63% of interregional trade. So this is trade within, let's say, China and the rest of Southeast Asia. And then when we look at the structure of the Chinese economy, it feels to me a bit like how the United States was going through the 50s, the 60s, and the 70s, where some of these cities where many of our cities became Rust Belt cities because money basically flowed to what we're calling high-income cities. And that seems to be what's happening to China right now. And so we think that China will have a concentration where there'll be about 100 cities, something like that, which will be about 44% of the population and 64% of GDP. And so when we talk about these sort of risk-reward opportunities, we look at sort of globalization as how do our companies figure out where to put their manufacturing in order to support either the interregional trade of 63% or the growth of these cities. And I think that's where, from a globalization perspective, this is the most exciting story that we're interested in, and we're trying to encourage our clients that if we're avoiding all these risks, you know, we wake up every day and we're worried about war in Taiwan, well, we're never going to be able to capture this additional $10 trillion of growth in these 93 cities in China. And I'll leave it at that. Thank you, Jay.
Thank you, Francis. Before we get started, does anybody have any questions or comments?
I have a question just to kind of summarize what kind of companies I mean, China is in a strange moment right now, and yeah, there's uncertainty, but I think you summed it up correct, Francis, where there is some risk, but is that going to stop companies from coming in and trying to find a way to take advantage of the situation? For small and middle-sized businesses, how do you see them? What do you see as a correct approach for them to consider China at this moment? I guess companies that might be fit for China, or how they should consider China at this moment if there's room to do business in the country.
Well, the installed capital base for manufacturing is tremendous. So I think any small to medium-sized company has to understand what is the China price for whatever commodity. What does the supply chain look like for them in China? And maybe that supply chain has one or two steps in between to avoid U.S. tariffs, which are you know, for many companies is a huge impact. But even if people are getting their final product from, let's say, Vietnam or Mexico, it makes sense for them to understand what does the Chinese supply chain for that look like, and that requires, you know, getting on the ground in China, figuring out who's doing it, what is the price, and how do I manage that whole supply chain. On the demand side, I think a lot of U.S. corporations, even the smaller ones, don't realize the opportunities that they have within the market, and so, you know, differentiated brands often can have you know, some things that you would think are not. I mean, I've been using Brompton bicycles as an example. I mean, that's probably, I don't know, $100 million company. Or if you take a look at you know, this Bob's you know, oatmeal, those guys who, you know, that product, they sell a lot here too. And so I think that there's the demand side of China is something that should be explored, not being so risk averse.
Yeah, one of the things that we've seen, Francis, is we've seen our customers retooling for the local market, where traditionally they've been primarily exports, and now they are retooling for the local market. We've seen that in helmets, like ski helmets and bike helmets, and we've also seen that in brakes and clutches, where traditionally they were producing for export, and now it's their business is actually growing, but they're refocusing on it's the local market that's taking over.
Yeah, and I think if you take a look, one of the reasons that trade services, global trade has declined is that a lot of trade doesn't happen because people have already built up all these domestic China production capabilities. So there's no reason to send a helmet from North America to China. You just make it in China and you sell it in China, and then you remit the the capital gains or whatever, just the dividends.
Right.
But yes, I think there are lots of these different opportunities. We were, for example, when we were working with Yankee Candle, it was about modifying the fragrances to suit the local economy. And so they just have different, they don't like, I don't know, whatever that is, the cotton laundry flavor or scent. They want hibiscus, like whatever it is. But this is the problem, I think, with a lot of the U.S. companies. They're like, why don't you like cotton? Well, or why don't you like chocolate chip cookie flavored candles? I'm like, we don't eat chocolate chip cookies, right? So.
Francis,
So I think that's, please go ahead, Teresa.
我叫 Teresa， 认识你我是很高兴。I would like to ask you about the growth of executive ability in China. Do you feel that there are a good number of people who either have attended the very excellent business universities there, or who have repatriated from the US with their degrees from University of Chicago and so forth, that could be recruited to support a business in, let's say, Shanghai, since that's where you are?
Yeah, I think that generally speaking, if you talk over the 30 years that I've been doing this, the average capability in terms of familiarity with global business practices has probably improved. There's a large collection of 45 and older executives who don't have very good job prospects right now. So I think there's a lot of very good people on the street who, in some ways, have an inflated sense of self-worth and also a bit of anxiety because the recent downfall in the economy has been abrupt and very deep. So what's happened is that many of the companies here have started to cut the most expensive people within their organizations. So there's a lot of very good people with good English skills that are 45 and older, that are, I would say, overpriced in many instances, but they're very good. And unfortunately, at the junior levels, recent grads haven't been as focused on learning English. Many of them bought into this narrative that China was taking over the world, and that's what, if you turn on the average television today, if people do that and listen to the news, it's just about how great China is and how another person gets shot in the United States. Every other story is telling the Chinese how great they are. And I think that they've become internally focused. And so I think from a recruiting perspective, it's a little bit more difficult to get people who are internationally focused, internationally minded, open-minded at the lower sort of recent grad level.
Okay. Well, sure. The more things change, the more they stay the same. I remember that from many years ago.
Yeah.
Sure.
Any other questions? One of the things I did want to share, Francis, is to your idea about not knowing what to do. You see, I don't know if you saw today in the news, there was an LNG company that just gave up a big project with Russia because its main customers are in the U.S. and they want to continue to work with the U.S. This is a Chinese company that builds LNG terminals and LNG products. So they're walking away from a huge project that they were going to do in the Arctic. And they just announced that today. And that, to me, that was very surprising because you'd think when you read the fringe news, everything is bipolar, and then you actually see that there are Chinese firms that are really trying to work with the States and with the West.
Yeah, I mean this is the interesting thing to me, Jay, is that how there's a large portion of the Chinese business community which turns on the news and pukes. Like they look at it and they say, well, this is not who we are. This is not who we want to be. We want to be back at the table with the world's leading economies. We don't want to be fighting with them. All of this empty boasting about, China taking over the world. Our GDP per capita is still, low, very low. Maybe a tenth of what the United States is, and we can argue about PPP and all that stuff. But there's a large collection of very globally minded, technologically sophisticated organizations that want to stay plugged into the global economy. They want to have global brands or global technology that they can take to the Chinese economy, and they want to use China as a platform or use these other areas like Mexico and even the United States as a platform for distribution and production. And so what we're seeing a lot of people doing is having some type of organization which gives them a veil of plausible deniability of either being American or being Chinese because of how things are so politically charged. And you see this with TikTok and Shein, incorporating in Singapore and then trying to say that they're not Chinese. But I think that there should be a lot more opportunities to do things like that. Ford has a relationship, I think, with Geely, which is doing that in the United States. GM is also doing that with Wuling. So they're using the Wuling EVs and the GM distribution channels to sell electric vehicles globally. So yes, I think there's lots of those different opportunities. It takes a sophisticated character to get involved in that type of stuff, and a lot of capital probably too.
Any more comments?
So I'm curious. I mean, what do people think about these scenarios? Do you guys, does one seem more likely than another? I was really impressed with this study that was done by the Mercator Institute. I think they did a fantastic job describing the futures of China, and particularly describing, most people think China is this, extremely strong and country with a very powerful leader at the top, and it's a shaky. I think it really is a shaky situation here.
I think one of the biggest worries here is just the pure uncertainty of not knowing what's going to happen. Just seeing how things gone, like with how they suddenly decided to be aggressive with COVID. So just like the regular approach of what China does with the regulations, where they might suddenly implement a regulation or remove one. It's that they have a history of doing things like that, which I guess makes people uneasy with their investments. I am hearing though that the larger companies who got a bigger piggy banks are more bullish when they're looking 5 or 10 years out with in China and seeing it as everything's on discount, and seeing, hey, there's still a lot of cities that haven't grown yet, and continuing to invest there. I think I read something yesterday, like Lego, 60% of their growth was all in China, and I think a lot of other larger multinationals have a similar mindset as well.
Yeah, my concern is actually not China itself, but the smaller cities. Traditionally, they were making money by the way they made money was to sell land for development and to get development as fast as it could go. And now that development is slowing down, they don't have a tax base, and I think they need to China needs to come up with a different way of taxing, because I'm seeing some reports that they are going after small business and doing audits on back taxes on small businesses, which is basically bankrupting them. And that's only in the smaller cities that were not very careful with how they spent. So now it will be interesting to see if China can come up with a different tax regime, or if they're going to have pockets of depression around the country as they put people out of business.
It seems that I've been looking at this as this is the Ohio River Valley in the 1970s, and we are coming into a period where rust belts will be created and money will flow to a few centers, and a lot of places are going to feel, rivers are going to be burning because of the environment's been destroyed, and towns are going to empty out. And if you take a look at a city like Nanjing is basically absorbing all of the surrounding cities, the wealth for those cities. The money is just flowing into places like Nanjing and Shanghai. And so I think we're in a situation where you'll see a lot of wealth transfers to try and keep people basically with their head above water in these failing cities. Most of which will fail, Jay. I think if you take a look at and you place bets on the average third or fourth tier city in China, most of them are doomed for failure. They've got no sustainable competitive advantage, and maybe they become a one-horse town, and then then Bruce Springsteen comes in and sings a song about the death of the steel mill in play. Maybe Obama can work with Bruce Springsteen on songs for defunct third-tier cities in China.
And with that, I think we'll wrap it up unless anybody has something else to say. A little humor for the day.
Yeah, levity. Well, I hope it was helpful. I'm trying to formulate my thoughts and get excited about what's going on in globalization, and I still feel that we have a long way to run, and that I encourage people to look at the global opportunities, even in the face of this dystopian future that we constantly think about in the future of China, because I think that the odds of dystopia are so much lower than the odds of, you know, kind of muddling through, but with all these opportunities, and this, where as people muddle through is where the cost of entry is actually lower. Once people get excited about China again, maybe 5-10 years from now, the costs are going to be, that opportunity will have long gone. Thank you for arranging this, Jay and Charlotte. Appreciate. And if anyone has any questions, you can find me via email, LinkedIn, wherever you get your favorite social contact.
And thank you, everybody that attended. And please look us up on LinkedIn and at the Fung website. With that, we look forward to our next meeting. And I think we'll have some pretty interesting speakers coming up in the next couple of months. So stay tuned.